Our next story now does get more into the coronavirus issue. Coronavirus drug development becomes a top focused at Gilead. Gilead is one of our coronavirus stocks. All right, so a lot of big companies are really putting a lot of focus into combating the coronavirus, and that's making news. Drug maker sprints to build up capacity to produce its promising antiviral Remdesivir should it prove effective in studies in China. So right now, Gilead has a potential drug called Remdesivir, right, Joey? Mm-hmm. All right, and once if it passes the tests to be able to be used in China, man, will that make them a lot of money. So, not that I want you to take advantage of a bad situation, but Gilead could put you in a situation where if that drug really hits off and makes money or helps the people in China to overcome the coronavirus, you're hearing it first right here. All right? The Wall Street Journal, Shan Li and Stephanie Yang were quarantined for 11 days in China's Hubei province, the epicenter of the coronavirus, before returning to the U.S. The reporters described what life is like under a mandatory 14-day quarantine at the U.S. military bases. All right, a team of a dozen executives at drug maker Gilead Sciences meets daily to discuss the coronavirus epidemic in China and the company's cross-continental scramble to develop the first drug for the new disease. Folks, Gilead is a stock that you probably want to put on your radar, but we're going to look at it a little different, a little deeper in a second. Another company out there is doing the same thing, Sanofi, to work on coronavirus vaccine. Now, that's two companies out there now being brought to you on Trending Thursday to go up against the coronavirus. Shares of Sanofi were up 1% trading on Monday after the French drug maker announced plans to work on a vaccine for COVID-19, the new coronavirus that has sickened more than 73,000 people and led to the deaths of over 1,800 people. The company said it will leverage previous work on preclinical vaccine for severe acute respiratory syndrome, which is SARS. Remember, SARS was a big story in China. Why is China letting all these diseases come out? Joey's shaking his head, he doesn't know. While it collaborates with the Biomedical Advanced Research and Development Authority, which is BARDA, on the COVID-19 vaccine. COVID-19 and SARS are both coronaviruses. So the information that they got in regards to SARS, they're going to try to use it towards combating the COVID-19 as well. So let's take a look at those two stocks. All right, we're going to get back into the software. We're going to go to my watch list. Go to viewers. We've already got a watch list created for our stocks today. Trending Thursday. Where is it? Trending Thursday / Wednesday, 2/19/20. Here's the stocks that we're looking at for the coronavirus. Let me move these over a little bit. The stocks for the coronavirus that we're looking at will be Sanofi and Gilead. Now, I'm going to spend a little bit more time today to analyze these stocks. Sanofi, trading right now at $50.85. We have it valued at $37.09. What we mean by valuing, this is what we feel the stock is currently worth. It is not a profit target, and now it helps us to decide whether we're getting into a stock that's over or undervalued. Stocks that are over their values are overvalued. Our mantra, though, is to have you in safe, undervalued stocks that are rising in price in a rising market. Now, because the stock is overvalued, does that make it a bad stock? The answer to that is no. It just means that people are willing to pay a premium to own the stock. All right? The next one, Gilead, $67.15. It's valued at $58.15. Again, the stock is overvalued. Now, again, because these are drug companies, most drug companies will tend to be overvalued because perception is that these companies are working towards drugs for all kinds of things, and people want to get in on the ground floor to get into these drugs or get into these companies. But keep in mind, people are willing to pay a premium and getting hopefully to get a high reward for paying that premium. Let's look at the VectorVest indicators. RV, which looks at a stock's long-term price appreciation potential. Keywords there are long-term potential. The stock's ability to go up as compared to an alternative investment in a AAA corporate bond. A corporate bond, you buy it, it matures, you get your money back with a small interest. It's pretty much a safe investment. What we do with relative value is we compare the stock to that AAA corporate bond to help you decide whether this is a stock that you want to own long-term for the next 1 to 3 years. Now, these indicators, RV, RS, RT, VST, and CI, are all cast on a scale between 0 and 2, where above 1 is favorable and below 1 is unfavorable. Right now, Sanofi has a relative value of 0.81. Well, it's below the value of 1. Long term, I may not want to hold this stock. Next thing, Gilead has an RV at 0.87, a little better than Sanofi, but still below the value of 1. Preferably, I would not like to hold this stock for the long term. The next indicator, relative safety, or RS. This indicator is an indicator of risk for the stock. Relative safety looks at the consistency and predictability of a company's financial performance. Does this company meet or exceed its earnings expectations quarter over quarter, year over year? Companies that meet or beat their earnings expectations are attractive to investors. When a company misses earnings, what tends to happen? The stock's price falls. When they beat, it tends to happen, stock's price rises. All right? So when we look at relative safety, it gives me an indication of how risky the stock is and the ability of the stock to continuously meet or exceed earnings expectations. Sanofi at 0.99, right in the middle. So this tells me that when earnings comes out, it may or may not hit earnings. Now, the higher above 1 the relative safety is, the higher the probability that the stock should meet or exceed its earnings. Gilead also below the value of 1. Now, let's go to our technical indicator, which is RT. RT stands for relative timing, and it looks at the stock's short-term price trend. Above 1, the stock's in an uptrend. The higher above 1 it is, the faster in an uptrend it is. The below 1, the stock's in a downtrend. The further below 1, the faster in a downtrend it is. Notice that both stocks have an RT above 1. The stocks are moving. So that means nonetheless, the fundamentals, the RV and the RS, are not in tune with the stock to buy and hold. But I can tell that with the relative timing above 1, the stock is moving up. Both of these stocks become trades. Notice that both of these stocks pretty much become trades because it's based on the news, that both of these stocks are working specifically on trying to combat the coronavirus. Keeping that in mind, what else is going on? The VST, which looks at, it's our master indicator for ranking stocks, looking at RV, RS, RT into one indicator. Above 1, the stock's relatively a good stock. Below 1, it's not so much. Looking at CI. CI is another VectorVest indicator that looks at the stock's ability to withstand long or lengthy price declines. The higher above 1 it is, the more the stock goes up than goes down. Notice that Sanofi, the CI is at 1.11. It's above 1. This stock tends to go up more than it goes down, and it's least susceptible to long or lengthy price declines. So as I start to put this all together, I want to also look at the earnings growth rate. Because these are drug pharmaceutical companies, they tend, and that GRT is the earnings growth rate. They don't tend to always make a lot of money. Why? Because a lot of their money is tied up into R&D. And they try to make it back once they get approved for the drug. That's why a lot of times drug prices are as high as they are. They're trying to recoup all of that money they put into R&D, because a lot of these stocks go out to the FDA and then they get shot down. But they put a lot of money into getting that drug to market. All right? So keeping all of that in mind, let's go look at these two graphs. View the stock graph. Let's take a look at them. If I had to make a decision on which one I'd like to buy, look at Sanofi right now. I'm looking at a 1-year graph. Let's put it down to a 3-month graph. Couple of things that I have on my graph. I have the 3 and the 8 exponential moving averages, which do a good job when the stock's in an uptrend or in a downtrend. I also have on support and resistance. Why? Because this stuff works. I love to see if a stock is breaking through resistance, or on the bearish side, if it's falling through support. Down below, I have volume that let me know that if there's conviction behind the move, whether up or down. And down below, we have the earnings per share, which looks at the stock's earnings. As I can see, it's starting to fall, but over the last 3 months, still higher than it was 3 months ago, but I am watching the earnings fall. If I had to look at Sanofi, today probably would not be the day to get into it. I do like that the 3 and the 8 are, the 3 is above the 8 and approaching a level of resistance. If I were to get into it, I really would rather wait until the stock breaks above that level of resistance to show me if the stock is moving higher. Let's go to the next one. Wow, Gilead. Big pullback from this level of the high. Notice though, even on the pullback, look at the 3 and the 8. The 3 and the 8 are still keeping you in it. Thus the reason why we like using the 3 and the 8 exponential moving averages. It does really a good job of keeping you in the stock and not keeping you from worrying, or keeps you from worrying when the stock's price does pull back. Look at this pullback. Look at the 3 and the 8 still hanging in there. If you are trading the stock off the 3 and the 8, you leave it alone. You leave it alone. Something else that comes to mind, as the stock's price is pulling back, what's going on? Less people are getting involved with the stock. See that trend moving down on volume? The stock's price may be doing a little bit of sideways mambo right now after it pulled back, but the volume on the stock is pulling back and earnings is lower than it was 3 months ago. So if I had to make a decision on either one of these, I'd like Sanofi a little better because it's trading higher towards its level of resistance as compared to Gilead, which is pulled back and is now a little bit in a sideways move. All right, let's close out of that graph. And that is part of the story for the coronavirus. Always remember as well, we do have a coronavirus watch list that you'll find here only in Trending Thursday. Knowing that GNPX was a big mover that's in this list. Here's Gilead is in here, and where's one other? And there's Sanofi. So there's stocks in here that you can take a look at. Here's the watch list average of all of the coronavirus stocks. If we look at a watch list average, look at that. These stocks are on the move. This is the watch list of all of the stocks, the watch list average of all of the stocks. Coronavirus, these companies are out there trying to make a cure for it. And even with the pullback, look at the 3 and the 8 on the watch list average. All right, so something to keep your eye on. And the only way you get to see these stocks all in one place, again, as a Trending Thursday participant, you get to see all of these stocks that are in the list that we have as well for coronavirus. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.